Hello, everyone. Welcome to the first masterclass session for the day on the second day of the 10th World Islamic Economic Forum. I'd like to introduce the session, which is titled Funding Platforms for SMEs. We've got two speakers for this session. The first speaker is Mr. Asad Ahmed. He's a managing director at Alvarez & Marshall, a professional services firm known for their turnaround management and performance improvement. And our second speaker for today is Aparajita Agarwal. She's a director for Sancap Forum and works for a company called Intellicap, which is a development advisory firm, and Sancap Forum is a social enterprise forum designed to support the growth of social enterprises. I don't want to take up too much of your time, but we're just going to have a quick photo for the speakers, and then we'll kick off the session. Thank you very much.
Assalamu alaikum and good morning. First session of the day, I think people are still coming in. I heard the dinner went in quite late last night. So we will get on to it. There are many ways to look at SME funding and the dilemma around SME funding. So for my next 20 minutes, what I have chosen is to give it more of a banking side. So how we view it as a bank from a banking perspective. So what I want to cover is, I'll do some introduction. There's some statistics about SMEs and UAE banks, some the life cycle of SMEs, I think, which is one of the integral reasons why banks are unable to find the right sandbox to play in. And then 5 issues which, in my experience, would challenge banks with respect to SMEs. And then a little bit about Alvarez & Marshall, the firm that I work for. So this is my own involvement with SMEs. I've been involved with them for about 20 years, and it's been in 3 continents. And I've found that the issues are not dissimilar. Whether there was, so I was working in Toronto for many years, then I, of course, in the Middle East, I've been here for a while, and then a couple of years in Kenya. And the issues about access to funding and access to markets and the perception they're unbankable, they're always the same. They may vary in terms of what has more priority, what has less priority, but fundamentally the issues are the same. With Islamic banking coming more and more to the main front, there is a growing demand for SME financing in the Islamic banking context. In Kenya, the bank that I used to run was the first Sharia-compliant bank, and we found that a lot of our customers were actually first-time borrowers. They hadn't borrowed at all, either at personal level or at the business level. And this is what it's saying. And Alvarez & Marshall, the firm you're working for, we have developed we've done a fair bit of research around SMEs. We've done a fair bit of work around SMEs. And we think that it's an area that obviously deserves much more practical implementation than attention. And I say that specifically because everybody's focused on SMEs, but there's very little which is actually happening. So this is my own view of SMEs over many years. Any economy you go to, there is no debate that they're the main contributor for both GDP and employment. There is always a number of advisory initiatives at the government level and at domestic levels, international levels. And I will cover that wide spectrum, the early versus stage when I go to the life cycle. And in the UAE, there's a balance between expat and locally owned SMEs. So in the last 1 year, when I've gone in, from my consulting hat and spoken to banks, and I've spoken to them and I said, how did your portfolio do in the last 5 years, post the downturn? And this is more, I guess, more UAE and Saudi-related questions. And the interesting thing that I found out was all of them said that their portfolio actually did better than their corporate portfolio, which is not what you would expect to hear. The two areas where the SMEs didn't do well were trading companies, which were often highly levered, and also where the SME owners had taken real estate positions. So they're taking real estate positions in the market through either bank lines or through withdrawing funds. So those, other than those two exceptions, SMEs actually did okay. And this is, again, my view of what the SMEs like. So these are characteristics that I've sort of come to believe that describe the SMEs. Now, I want to pick a couple of them, and one is loyalty to banks. SMEs are much more loyal to the banks, but it doesn't always work the other way. And I say that after 30 years in banking. When there is an issue, bankers are much more difficult, but the SME treat their banks with much greater reverence. Now, also, SMEs, not all SMEs want investment bankers all over them. Not all SMEs have thought about multiples and price and exits and IPOs. Fundamentally, SMEs don't want to go out and conquer the world. SMEs want to establish a thriving business. They want to leave a legacy. Not every SME wants to go and have, be the best and the largest on the planet. And I'm totally convinced that SMEs are not a high-risk proposition. So, again, importance of SMEs, nothing new here. Banks want to get into the SME business. They know that there's revenue there. They want to see it. But prescriptions don't work. So in a couple of the GCC countries right now, there is prescriptive guidance that so much of your percentage of your portfolio has to be SME. And if you're not prepared and you do that percentage lending, then it is more than likely that your portfolio is not going to have, is not going to do well by the end of that period. So there is lots of opportunity for banks. They understand that. And of course, from a market perspective, there's a lot to do. Common SME hurdles, again, nothing new here. These are things that we've seen many times, we've heard many times. In every article, they'll talk about the same thing. And these are all there. There's no denial. So whether this capital or policy and education and training. So some need to be tackled at the macro level, at the government level. Some need to be tackled at a more domestic level. And when I say between sort of high end and between the actual users. So maybe government organizations or GREs might help. And then recently, Dubai Chamber, Dubai Economic Council did a study. Really, really nice piece of work. And this was done, I think, in June. So very recent stuff. So the next 2-3 slides are from there. And some interesting stuff came out of it. And this is relating to the UAE, but I would say that it's representative of certainly of the GCC. So banks refusing to lend because they see a high risk of business failure. And my view is that proposition is fundamentally incorrect. That if you start a position saying that there is a high risk of failure, you're never going to go out and lend it. So there is, they want to do it, but they don't want to do it because they think it's not going to work. Management competence, insufficient collateral. When I was, when I went to Canada about 15, 20 years ago, and I spent 10 years there, the entire SME segment or mid-sized segment was entirely collateral-based lending. Until you had hard security provided, banks wouldn't lend. And that's coming from the Middle East, where hard security was often not available. I had difficulty understanding that why wouldn't you actually lend to the business, understand the business? But the proposition of the credit guys was security comes first, the business comes second. And then these whole sets of reasons why banks refuse to lend. And these are the risks, again, the issues that banks feel, again, from a bank's perspective, of what needs to be fixed before they will actually start lending. So they want collateral is the big thing, business risk, and so on. So these are reasons why not to get involved. no reasons why the bank should want to get involved. Now, this is an interesting thing. So 40% of the banks in UAE today are not lending to SMEs. That's a big number. So this was a study done on the basis of 19 banks, but let's assume that there are 50 banks, but let's assume that there are 25, 26 local banks. 40% of the people don't lend. And if you look on the pie chart on the right, so 46% say that their lending to SMEs is actually less than 10%. I don't think it would be unfair to include the no comment one in that too, because I guess the banks who didn't want to make a comment didn't want to admit they're not lending. So if you put that in, you'll say 56% of the banks have less than 10% SME. So when I started this conversation with you folks earlier, I had said that there is a lot of conversation around SME, not enough on the practical side. And this is what I meant. I mean, if 55% of the banks are not lending to SME, have a portfolio of less than 10%, where is the SME going to get its funding? So these are some of the constraints that were picked out by this study, and some is our own with respect to the UAE banking sector and the SME and the segment. There are constraints. There are some major initiatives going on as well, but a lot more needs to be done. And a couple of areas in terms of the IT side and IT support, and of course on the veracity of financial information, those are critical areas for the SMEs to develop. Now, this, in my view, is a very important slide because SMEs are not one big box. SMEs is a journey. To be an SME is to be a journey. So in each stage of the SME, the capital requirements and where that capital comes from is different. Now, there is often a gap between both the bank and also the SME owner. Some SME owners who are just starting out believe that banks should line up to give them money, and that doesn't work. Similarly, banks feel that SMEs don't want to be there. We shouldn't be there at all. They're risky. So what we've done in this chart, and this is something that we prepared in-house, is we said, let's break down the SMEs and see what their needs are for each stage of the thing and where will that funding come from. And that's where the third category is, that when you're on the concept, where the funding comes from and so on and so forth. In our experience, in the experience of the banks that I've worked with and my conversations, when you do the basic suite of factoring, which is not very common here, but after the 3 years, that's when banks should actually start coming in. So when you have the basic need for trade finance products, the basic need for FX products, the basic need for working capital lines, and 3 years onwards is a successful place in general for the banks to be. And then the debt programs increase. A lot of the banks have difficulty, actually, and I'll come back to another slide later. A lot of the banks have difficulty on how to deal with SMEs, even when they're growing in after the third year, and what kind of controls that they need to put around it. But I think this sort of puts in one slide where we think the banks should play a role and where angel investors and equity investors come in. So this is the typical gap. So banks do retail because they understand retail. And retail has, standardized, parameterized lending and scorecards, so it's easy to do. And then, of course, you have the wholesale banking. And these are my numbers, our numbers, 50 to 250 million. They may vary. Some folks may want it, their corporate may start at a higher level. Their retail may go to a higher level. So this is a general portion. But, and then everybody wants to do corporate banking because it's the in thing. Banks like to deal with the large ones. And that's okay. But the gap arises between this 50 and 250 million, and there are institutions where there is actually, so if you go back to the previous slide and you say 55% have, 46% of the banks don't actually do SMEs, which really means that they do this little bit of retail, consumer banking, then they drop the client, right? Because this, clients doing now 100 million, they don't have a way to deal with it. If and when it succeeds and gets to 250, then they'll go back and try and get him back. So there is this gap in the customer life cycle, and where banks actually go back away and then try and get back to the corporate side. So clearly there's a loss of revenue, clearly there's a loss of clients, and then of course, bringing new customers is always more expensive than retaining them. So this is where the gap is pretty much within the banking community. Okay, one slide in terms of why there's a gap within the funding within this life cycle. So banks often want to fit SME into one or the other. So you'll have conversations of where does this report into, where does this fit into? So and the answer is it depends on the institution and the way they view it, and then the presumption that the characteristics that there's a high-risk proposition, and that the characteristics of the SME are either high-end consumer or low-end retail, and they're not. SME is a totally different segment. And then there's no MIS, and not usually enough, not enough granular MIS within institutions to manage the SME business. Banks have great accounting information. They have fabulous accounting information. But in terms of MIS, be able to go micro level and manage accounts, manage relationships, see what's happening, some banks don't have that. And they struggle with documenting an underwriting policy as to, what exactly do they want to do. And then obviously the right skill sets and the functions. The remedial function alone, now the remedial function in retail and the remedial function in corporate are totally dissimilar to a remedial function in SMEs, and in terms of the skill sets that are needed from those perspectives. So we think there are 5 broad areas where to approach SMEs, and ways to market and approach to market relationship. So these are the key areas that you have to build around an SME banking platform to be able to do bank SMEs successfully. And we have a lot of research behind this and a lot more detail, but essentially within the consumer segment, within the SME segment, and within the retail segment, there are very distinct differences of how you do all of these 5. So how you do all of these 5 is very, very different in all the 3 broad segments. So our view is that you need to understand how you want to do it in SME and to make it successful. Finally, I just want to talk to you a little bit about A&M. Just 3-4 slides. A&M is multidisciplinary organizational and performance improvement company. We have about 2,500 people across 40 locations, and our core competency was restructuring, but that's now a portion of our practice. We are also focused on many other lines of businesses, performance improvement, private equity services, etc. Financial services group, which is the part that I work for, we are a global group. We have about 120 people working on the financial industry side. Our fundamental underpinning of the financial services is corporate governance and risk, and we've now have a very strong regulatory practice as well. Regulations is driving a lot of business, is providing the framework for a lot of businesses globally. You've seen what's happening in the US. You've seen the unified approach that's coming out of Europe, and it is important for us for 2 reasons. One, it's important because we need to understand that being able to meet your local regulators' oversight and local regulators' guidelines may no longer be sufficient. The world is getting very closely integrated, and banks across developing geographies will need to start being able to comply with regulations that are coming out from the US and Europe. The second thing is that that will have an impact on businesses here. So you may have seen in the press recently that some banks are exiting certain segments and so on and so forth. This is all driven by regulation and KYC and compliance and so on. This is our global reach. We're pretty much everywhere except Australia. Very successful practice. And this is our history. So we were set up in '83. It was set up by two ex-bankers, Tony Alvarez and Brian Marcel, who still run the company today. They're extremely hands-on on the business. And this is our life cycle. We've had a number of things. Our largest assignment that we successfully completed was Lehman Brothers. And in Lehman Brothers, we were called in, and Brian Marcel was CEO of Lehman Brothers for 4 years. So, and that project has now been successfully handed back to the creditors. And then, of course, like I said, 2,500 people in 44 countries. The A&M, there are two things which make A&M very different and why I enjoy working there. One is that in Alvarez and Marcel, everybody has come from a practicing background. So I've been in banking 30 years. I now work for the financial industry services. There are similarly people who have been in healthcare, in retail, in wholesale, in oil and gas, who have had working backgrounds and have now worked for A&M. So we're a group of practitioners. We're not consultants for the purpose of providing a deck. We actually understand, create a range of options, advise the client of the range of options, and then we get joy in implementation. So we actually help client implement the solution. And the second reason why A&M is different is, we have an inverted pyramid. Most of our people are actually senior people. So out of 2,500 people, I think we have about 350 managing directors. Now, this is not what you would normally see in a consulting organization. So and the reason we do that is because our senior people lead the jobs. We are the ones who are actually going to lead the job. And I can see it ticking down to 0. So anyway, this is our main, so what we do in the financial services industry. We cover pretty much all the areas, both in the front office and the back office. And these are our locations, and thank you very much. Thank you.
Thank you very much, Asad, for a very interesting discussion on characteristics of SMEs, reasons for lack of funding, and some of the differentiation of SMEs, especially over the life cycle. I'd now like to hand over to Aparajita for the second discussion today. Thank you.
Good morning, everybody. It's a pleasure being here in Dubai today morning. And what I'm going to do in my presentation is focus a little bit more on the innovations part of the SME lending. Start with a little bit of introduction about the group that I represent. So this is, we are a relatively young company. I'm based in Mumbai in India. And I represent IntelliCap, which is a private limited company based out of Mumbai. It's about 12 years old. This is a timeline representation of our entire group, of the key sort of entities and initiatives that we lead within the group. And IntelliCap, as you can see, was founded in 2002. But we also have a sister company, which is a venture capital fund, group of funds, about 4 funds that they manage under, which is about $157 million, all of which goes towards investments into rural enterprises in India. And they're just currently raising their 5th fund under Avishkar, which is going to invest in Pakistan, Bangladesh, Sri Lanka, and Indonesia. And the idea is to replicate the success that we've seen in India in investing in very early stage rural enterprises. IntelliCap as a company has about 100 employees. We've been servicing clients. I think our list is about 100 plus clients now. Over 300 engagements in across 25 countries. Our entire focus has been in developing markets. So a lot of our work has been in India and neighboring countries in South Asia and Southeast Asia, as well as increasingly in Africa. We've continually also been incubating new enterprises and new initiatives that service the need of the entrepreneurs. Over time, over the last decade, we have created several new initiatives, and some of which have become much larger companies than what the parent company is currently. IntelliCash, for example, which was founded around 2006, started off as a microfinance incubation project and moved on to become a non-banking finance corporation that further acquired another MFI, one of the largest, I believe the second largest sort of MFI in the eastern part of India, servicing about 200,000 customers, all from low-income population. I represent the part that we founded in 2009, which is Sankalp Forum, through which we've created a public good platform that reaches out to very early stage social enterprises, which are companies were driven by entrepreneurs with a motive of both profit plus impact. And we've been supporting entrepreneurs. We've supported over 400 companies, which are in very early stages, usually under 3 years of existence. And we've been supporting them through capacity building and helping them to get to a stage where they can raise investments. And also a few other initiatives that I have mentioned here is a group company called IntelliGrow, which we started in 2010. This was the first venture debt company that started for SMEs in India, has currently disbursed over 100 crores across, this is close to 100 loans now, started off as a loan facility for companies that are not bankable and hence do not get access to bank credit because they do not have a credit history. And I'll talk a little bit more about IntelliGrow in the last few slides of my presentation. Similarly, we have created two mechanisms, two sort of platforms. One is called Startup Wave, which supports virtual access for incubation support services to very early stage SMEs. And PRISM, which is an impact assessment framework for funds that are investing into early stage enterprises. Going to our approach, we strongly believe that you need to create a very strong enabling ecosystem to let an entrepreneur nurture and to really support any enterprise that an entrepreneur drives. And where we focus on is usually at the very early end of the spectrum, which is where there is very little support for entrepreneurs and early stage enterprises. And what we've been doing this is through a host of services, starting from advisory and research services that comes from a company like IntelliCap, going on to providing specific services like financial inclusion, supporting through equity investment, debt services, creating convening platforms and enterprise showcase opportunities through forums like Sankalp, providing angel investment through our impact investment network, supporting continuous incubation support, even pre-incubation support, and continuous capacity building and incubation, as well as providing a range of technology services. So in some sense, it's a whole host of requirements that any enterprise needs, and the part that we focus on is really on the very early stage enterprise, the micro, small, and medium enterprise segment. We are focused, like I said, we are focused on the business of providing innovative business support to very early stage companies that can help them build profitable and sustainable approaches. We have a strong filter of looking at not just profit, but finding the entrepreneurs and companies that focus on social impact as well. So we look at typically companies that aim at the low income or mid income segment and are looking at markets that haven't really been serviced before. And why SMEs? I don't think I need to explain this much, but essentially, if you look at around the world, you look at at high-income countries, SMEs contribute about a little over 50% of GDP, but only about 15 or 16% in low-income countries. If you look at my home country, you see that we employ about close to 50 million SMEs employ about 40% of our workforce and only contribute 17% to the GDP. There is a huge gap in terms of the kind of SMEs that are run by men versus women, and there is a huge women workforce that's emerging in the country. In a country like Nigeria, for example, in Africa, you'd see that about 17 million SMEs are valued under $32,000. Again, back to a statistic from India, you know, I put in a statistic here around how many of these are women-led enterprises, and you see only about 2 million are actually women-led enterprises, and a lot of these do not have active involvement from women on either board or on senior positions. The share of rural enterprises is even lower. And so we feel that there is a need for innovation in SME funding. And what I have done ahead in my presentation is taken a few case studies from around the world, from different continents really, to talk about the kind of innovation we are seeing emerging in the last decade. According to one of the surveys that we were looking at, 10,000 firms in across 80 countries, all of them state about financing as one of the biggest gaps. Asa talked about this in fair detail. You hear the traditional banks complaining of the lack of financial data, about the lack of management expertise, or lack of systems and processes in SMEs. Microfinance institutions, which are often thought about as entities that can provide support to enterprise, financing support to SMEs, don't usually service that because either the regulation doesn't allow them to fund to enterprises, which are SMEs technically, or they do not have the bandwidth and the capital to do that. VCs and angel investors usually express concern with exit because SMEs is usually still largely falls in the unregulated market in a lot of countries, and so it's a hugely underdeveloped secondary market. Like I said, I've put in some examples here, like Alipay, Crowdcube, IntelliGrow, SCF Nafin, M-Pesa, and Grofin ahead in the presentation. We can talk a little bit more about that. What I've done is, use the example, quick sort of, I'm assuming a lot of you in the audience might be familiar with one or two or probably all of these examples, but there are some great innovations that we've seen emerge in the last few years in just under a decade. Alipay is a good example. Most of you would know Alibaba.com, and Alipay is one of is a e-commerce is sort of a facility that they started in 2004, which enabled online transactions, and the difference really was that this allowed people to take loans online, and it was SMEs could actually stand in for each other. So a group of 3 SMEs could actually stand in for each other as guarantors. And that was hugely sort of innovative in the market that they were operating in, where SMEs usually would have trouble accessing bank loans. And within 2 years of its launch, Alipay had already made loans worth $2 billion. And it's growing. The second example I've taken here is innovative financing via mobile, and M-Pesa, which a lot of you might be familiar with, is a hugely successful service launched by Safaricom in Kenya. 2/3 of the adult population in Kenya uses this. Everybody uses M-Pesa for making transactions. Has over 20 million subscribers in the country. Now, with the success of M-Pesa, what they did was wrote onto this with another platform called M-Shwari. And M-Shwari basically enables people to take access loans almost immediately. It enables the creation of a loan account really quickly, and allows it, makes it really simple to access finance. Essentially, in this case, it doesn't necessarily need to be an enterprise. It could be an individual or an enterprise. So it's hugely important for entrepreneurs to be able to access such services at very simplistic, least paperwork kind of model. The next one I have taken here is from UK, is crowdfunding platform called Crowdcube. And this is very interesting because what it does really is give an option to unlisted companies to raise equity investments through crowdfunding. And they've also simultaneously in 2013 launched a Crowdcube venture fund as well. But the equity-based crowdfunding platform, Crowdcube, is quite interesting because people can invest as low as £10, 10 UK pounds. And exit is pretty easy because people can sell off stakes to other people. Typically, it's been creating a fairly liquid market for entities which would not be able to raise money otherwise, and it's been regulatory in the right space and has continuously seen an emergence of lots of companies using this in the UK. The next one is National Financier from Latin America, and if you look at this, this is again an interesting one because this is an invoice-based, a reverse factoring model, an invoice-based model. When an SME receives an invoice, an order from a large company to actually fulfill an order, they can actually borrow based on the invoice that they have. And that's interesting because really the guarantee is the fact that that the SME has a confirmed order in hand and will get the payment from it from a large corporation. And so the guarantor in some sense is the large corporation or the client that is putting a demand in front of the SME. And again, this has had a pretty much 100% success rate till date. The next one is Grofin, and Grofin again is very active in Africa as well as has a base in Middle East as well. It's a specialist finance company. The way they manage it is that they have raised funds on behalf of international investors, and they're really deploying that capital into SME financing. And the interesting part about this is that unlike traditional lenders, they've actually used a lending plus or business support plus lending approach. So they've, apart from lending, they've been providing business support services, which could mean individual mentoring and support services to enterprises that they're supporting. And most of the type of SMEs that they support could be, small truck companies, people running a fleet of vehicles, or people starting on a home enterprise, etc. And it's what's really interesting is that the people are really Grofin has itself become a supply pipeline to a lot of banks who eventually look at taking the successful clients, SME clients from Grofin to the bank lending portfolio eventually. And so in some sense, they've become this one-stop shop for very early stage entrepreneurs. The next one that I'm going to talk about is closer to us because this part of our group. It's an angel investment network that we founded about 3 years ago. This was India's first angel network that was totally focused on impact enterprises, and this came about because while we were servicing social enterprises, we realized that their financing opportunities were very limited, and most of them struggled when it came to accessing money beyond friends and family, and when they weren't ready, when they weren't big enough to actually approach banks. And what we've seen here is, over the last 2 years, is we've got about 60 members now that are mostly high net worth individuals or family foundations that have become part of this network. They pay a membership fees and they co-invest. So typically 3 or 4 and sometimes more of them come together, do a full due diligence on the enterprise that we showcase, and then eventually invest into them. We've seen about, in the last 1.5 years, we've seen 8 investments that we've successfully facilitated, and the traction is just building up. The interesting part here is that the exit options are many, because most of the time the equity stake that the angel investors take is very early and usually create a huge viability proposition for private equity firms or venture capital firms to come in this 3rd or 4th year of the company's sort of growth, of the SME's growth, and take stake. I've gone in a little bit of more detail given our sort of expertise of working in this space in India. I've taken a few data points from India to talk about how the debt market for SMEs looks like in India. And I don't think this is going to be very different for a lot of emerging markets. And we're seeing very similar statistics from countries in East Africa as well, where we're starting to work now. What we see is that there is a hugely underserved missing middle. And this segment is usually, SMEs that are into their first year of operation to their fourth year of operation. We see that most of these have very limited financial and operational track records. So the kind of paperwork or the kind of commitments that the banks or formal lending organizations need from them is usually lacking. And in most cases, they do not have a collateral to pledge against the loan that they are raising. What we see is that a lot of them also seek flexible repayment structure, unlike what a bank could potentially offer them, because sometimes the cash flows are not necessarily monthly cash flows where they can pay, let's say, an EMI model of loan repayment. And we also see that a lot of time they cannot afford the high, processing fees, and sometimes the approval time, which could go as high as, 3 or 4 months. The existing non-banking finance companies that we see in India haven't been really serving effectively this missing middle, primarily the way the financial landscape has evolved in India, but also because this is a hugely underserved space. We've seen an emergence of SMEs over the last 20 years, and we haven't seen as many financial institutions coming out to service them. It is a high-risk zone because a lot of these companies, the survival rate is really sort of dismal. So what we've seen is that also that there is a lack of financial transparency, that the existing NBFCs don't see how they could mitigate, and hence they are very hesitant to lend to new SMEs or sort of unproven SMEs. So the debt gap that actually currently stands for the small business segment is about $8 billion USD, and this is this is sort of what is the recorded one, and there's probably a lot of more unstructured SMEs or sort of under the radar micro enterprises out there which need even more. This was one of the reasons that led us to start IntelliGrow, which is a group company and a non-banking finance company, primarily servicing early-stage small and medium enterprises. And what we're looking at is the total debt gap, like I said, was about 8 billion. But of this, we're basically focusing on the working capital gap, which is where a lot of SMEs perish because they do not have enough money to run their day-to-day operations. And that's the part that we are sort of focusing as our target market. This is a bit of history behind how this came about, and I'm pleased to say that what's happened over the last 3 years since we've started IntelliGrow is there is an emergence of several other venture debt support companies like IntelliGrow in India now. And there are about 3 or 4 that are in the process of establishment now. I was reading in the newspaper yesterday about the ex-Apple CEO actually setting up a new NBFC that's going to target Indian SMEs for venture debt. So it is a growing market, and it's really positive environment for SMEs in terms of their financing needs now. But just going back to this slide, this is what I was talking about, that there is a systemic lack of appropriate debt finance for small and growing businesses, and this is what we've been calling the missing middle. There is not enough viable debt financing options, and this means that most of the time they end up taking loans from unstructured loan companies, or sometimes at hugely exorbitant rates. The way we went around this was we'd initially done in 2010, we'd done a study to identify the debt gap for the MSME segment in India. And this actually led us to some of the findings that I've talked about earlier. And what we realized was initially we actually got support from Shell Foundation to actually create a loan facility and use part of our equity and part of Shell Foundation sort of grant facility to create a loan facility that would lend to SMEs on an experimental basis. This became a unit within the company, and by 2011, we had actually created Hybrid off as a separate company. Between 2012 and 2014 is where the growth story for us has happened, where we've seen that our cumulative disbursements are a little over $2 million at this point. We have had institutional investors like the Dell Foundation and Omidyar Network having come in to invest into the company and to help service more and more SMEs. We have raised subsequent rounds of debt from larger wholesale institutional lenders, and so in 2013, for example, we raised about $5 million that was further deployed into very, again, early stage SMEs. Going to here, on this slide, I'm going to point to exactly where the difference is and why we need more structures like an Intelligro sort of a company in not just in India but in a lot of emerging markets around the world at this point. Because usually, and this is just a quick comparison of where we stand, where a company like Intelligro stands as compared to the other non-banking finance corporations, banks, which are private banks and under sort of credit guarantee scheme. Banks that offer credit guarantee schemes. And you'd see that most of these look at companies that are over 3 years or older. The actual track record, while the paperwork may say 2 years or older, the actual track record would be usually companies with 4 or 5 years of credit history. The ticket size is much higher, usually over 10 million. Typical ticket size, sweet spot would be in the 50 million Indian rupee range. You'd see that the stage of lending is usually towards the growth and mature phase. So these are established companies that have shown viability. And the collateral is typically 100%. The product structuring is usually, the product is structured as a very standardized product that is, usually an EMI-based product with not much flexibility. And the bank lending rates are usually as per the market lending rates, but plus 2.5% usually as compared to regular loan rates. The processing time could take as long as 2 or 3 months. Oftentimes 3 to 4 months is a norm that we hear in the market. And where we sort of brought in a little bit of a difference given one, the agility, given that it was a much smaller facility that we started with, and the fact that we were looking at a completely underserved or unserved market, was that we've been looking at companies that are under 1 year as well, and we've been looking at companies that are often pre-revenue. We look at a ticket size of under 30 million INR. The stage of lending is growth phase, so we are looking at early moving towards growth stage. There is usually no collateral required, almost all the time, no collateral required. And the product is customized for each company. So most of the time, the repayments are matched to their cash flow. And if a company receives its cash flow every 2 months or every 3 months, the product is accordingly changed. It's slightly more expensive than the prevailing bank rate, but given the fact that it costs us to service that we pick up the loans from the market and it costs us to service. It's about 1% more. And yeah, okay, just 2 minutes. And the processing time is usually lower. And I'm on my last slide here, which is around, I'll leave this here, but it is about one of the companies that we supported, an electronic, it's called EPS, Electronic Payment and Services, into the business of cash management. And we've been involved with them at the time they were pre-operations in 2012 and have continued to sort of make 6 subsequent loans to them since 2014. And the current group revenue, the current company revenue is over $1 million per month. And what's interesting here is that SMEs like this wouldn't have probably been around if facilities, innovative financing facilities weren't there. And we could play some role here, but there are more and more companies like this that need financing, innovative financing. And that's our contact information. Thank you again.
Thank you very much, Aparajita. I'd like to open up to the floor now for any questions for either of our speakers. Please just raise your hand. I'll reach out to you, introduce yourselves briefly, and direct a question to one or both of our speakers. We are running short of time, so please just be to the point. I'd appreciate that. Thank you very much. The gentleman in the middle there, please. There's mics roaming around.
Hi, assalamu alaikum and good morning. My name is Mohammed Mahiz Rahim. I'm currently doing my PhD in SME financing. I would like to direct my question to Mr. Asad. Two short questions, if it's possible. Can you just comment on the factoring market in UAE and GCC overall? If you have any information about how big the market is, or if factoring is actually an option which is being used to help SMEs out. And the second short question is about financing for SMEs. You mentioned that some banks say that they lend and some they do not, and so on. Is there any difference between the attitudes towards SME financing by Islamic banks and from conventional banks? Thank you.
Thank you.
Sure. On the factoring side, no, there is no developed factoring market in the UAE. It's principally because the laws here don't allow for it. So there's an issue of securing how do you secure debt and stuff, and so the laws don't agree, and I can take that offline with you. Then there is no, unlike the US where ICC rules apply on factoring. In fact, banks like Silicon Valley Bank in California have built a business around factoring. So, because factoring is the first stage of lending in developed markets, but doesn't apply here. I think, I don't know. No, I don't think banks, the conventional and Islamic, there is a huge difference in terms of the way they approach the SME segment. No, I think there's, like I was saying earlier, there is more. Some SMEs come to Islamic banks because they prefer that, but in terms of the way the banks think, no, I don't think there's a big difference.
Thank you, Asad. The lady at the back there, please.
Thank you. Thank you very much. I'm Sharifah Nur Kamsia, Innovation and Nuclear Advocate from Malaysia. I'd like to thank Mr. Asad and Ms. Agrawal for sharing with us your experience and the challenges in trying to finance SME. From Mr. Asad's experience and presentation, we noticed that there's a lot of problem in terms of collateral, same as Ms. Agrawal. So from here we can see that although innovation is being promoted, especially in terms of technological innovation, providing new products and services. However, Ms. Agrawal had spotlighted very correctly that there is lacking in innovation in financing. And I think that is a critical point because when we're talking about innovation, a lot is about the labs, a lot is about R&D, but there is a major disconnect in innovation by the financing community. And it is truly encouraging to see and hear from Ms. Agrawal that your team of innovative businesses and enterprises are looking at it holistically in developing ecosystem so that you look at the entire ecosystem to provide from angels right up to debt financing. I'm pleased to inform the audience here today that I have prepared, published a book on technological innovation.
Sorry, can I ask if there's a question that you get to the question, please?
Afterwards I will ask, And it's going to be launched tomorrow by Tun Abdullah at 9:30 in the media room. And it spotlights also on innovation. So I would like to ask if both gentlemen and ladies could share this with the Islamic community to bring on board the innovative financing solutions so that more of the banking community here could initiate and introduce that to further help the SMEs, especially in the high-tech and technology-based sectors. Thank you.
Thank you. I guess there wasn't really much of a question there, so thank you. Any more questions? We've got about 1 minute left. You raised your hand up? If there's a very short question, Can we have a mic for the gentleman at the front, please?
The name is Kaiser Naseem. I work for the IFC for bank advisory in the MENA region. Firstly, thanks a lot, Asad and Parajita, for your presentations. I think very informative. 5 questions. So I'll actually ask the question.
You've got time.
No, I'll ask the question and then I'll prioritize the one I want the answer for. So one is, Asad, the director to you, do you actually work with banks to fix all those issues that you highlighted? To you, you had a lovely ecosystem. Prism, you didn't talk much about. And to me, I think that was the most important one because all that you do has to have an impact. So if you could give a little more details on that. Size of investments for your micro and SMEs. I just want to throw in a little statistics to answer the PhD student's question.
Can I suggest you take that offline, please?
Okay, thank you very much.
Thank you very much.
So there was no question in there, actually. The one I want you to answer is, do you think these innovative and alternate financing mechanisms will be a challenge to the banks in the next 2 years? I won't even say 5. Payment systems plus funding sources, which banks are supposed to do, are being taken over by alternate financing.
Thank you.
That's the question I want answered.
Aparajita?
Okay. I don't think it's a challenge, but I think it's still just the tip of the iceberg. So there's very little still innovation still that we are seeing, and a huge reluctance from banks. And I can speak from my limited knowledge of India and East Africa that there's not as much innovation. You would see big commercial players, the big banks, actually taking up yet. So that's where we would think more needs to happen, and probably more at the regulatory level as well. I mean, India's regulatory climate is financial regulatory climate is technically so difficult that it's not very innovation focused in any case when it comes to financial services. Yeah.
Okay. Thank you very much. I think it's been a very interesting session. There's been some interesting discussion and debate. Please, continue the discussion offline afterwards, and I hope you enjoy the rest of the day. Thank you very much.